Okay, folks, and we are live. Welcome to Thursday Night Stock Charts Live. This is where we talk about the weekly charts. How do we appear poised to close out the week? But remember, there is one trading day left to go. So while we will go over the Thursday Night Stock Charts tonight, Friday can make a big difference. Without fail, on Saturday, when I review the closing price action of the markets with members, there's always a change from Thursday. But by and large, with most charts, they stay pretty much consistent. So this is where we begin to take a look at how do we want to position for next week. We're not going to wait until next week to get ready for next week. We're going to do it right now. So let's also plan on talking about Amazon. Big blowout numbers. We're going to talk about our buy points for PayPal, Facebook. Yes, we're looking to buy them. And we're going to do a lot of stock chart requests. I'm going to try to preserve some time tonight to go over as many charts as possible. And before I do that, let me say hello to people. William, hey brother, how you doing, man? Buster Stack, it's been a while. How you doing, man? All right, so people are going to slowly filter in here. I'm surprised there's not more people given the sell-off. So let's begin with the price action of Amazon. Amazon reported numbers after hours, blockbuster, huge numbers. The shares surging after hours. One of the drivers is that Prime business. So, Casper, my European brother, how you doing, man? Welcome aboard. Hey, did the AEX break yet? I didn't take a look. I thought about you the other day. So Amazon knockout numbers. I can guarantee you the futures are up already. And they are. They were higher. They've pulled back. And I want to talk about this. Okay. So I was asked earlier, is it time to buy the SQQQ? No. What's the SQQQ? That puts you short of the SQQQ. Why do you want to short this afternoon? Because it's been hammered. And tomorrow is Friday. You need to understand the psychology of the market. So shorts. When I short, I really don't want to I'll stay short, but not as short as I was when I came into the day on Friday. A lot can happen over the weekend. Headline risk. And you could wake up to a big short squeeze on Monday. So what do you want to do? You want to lighten up. So after a big sell-off like today, without the Amazon earnings, I expected a rally tomorrow, whether it be a gap up higher tomorrow morning and a fade, or a move lower in the morning and then a rally into the close as shorts covered their positions. So it appears as though we're going to move up higher tomorrow. What I'm going to caution everybody about, especially the newbies out there that haven't traded in a market like this. I've been trading for almost 30 years now. I've been through several bubbles, hundreds of corrections, and folks, we're on the verge of a bear market. So if you chase this market, you're going to get burned. If you're worried about YOLOing or holding and all that nonsense, get rid of that frame of mind. That is dead. You want to step away. You don't want to be a buy and hold trader. If you're young and you want to be a buy and hold investor, you want dollar cost averages to the market, great, do it. If you're a trader and you're chasing this market in the mornings as they gap it up higher, you're setting yourself up for failure. Don't let that be you. Don't be a bag holder. I need to talk this weekend. First, oh, you want to do a coaching session? Yeah, I have your emails. I started replying. I drafted it because I don't know how else to check you out. I don't. We'll work on that, Casper. Let's look later at AEX and ASML. All right. Yeah, I'm curious about the AEX because I thought that would break. It went. Oh, it did break. Okay, good. Good. Are you still short? Hopefully. Okay. So tomorrow, expect a rally. All right. It's not enough. It's not enough. We're going to talk about why it's not enough and where you should be looking to put your money right now. Okay. So futures up, Amazon up. Let's go to what I think is the most important news event of the day. And it is this. I want to give a huge shout out to those base truckers up in Canada. God bless you. We are with you 1,000%. And these pieces of human waste for government that they have up here, not that we have much better. Saskatchewan Premier pledges to end all COVID restrictions as Ottawa braces for more protests. You got to have resignations. If this is such a crisis and they're so weak that people are supposedly dying, that they have to do lockdowns, vaccine passports, restrictions, blah, 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 blah. If they're so steadfast in their belief and their conviction that they're saving lives, why are you going to let a few truckers back you down? Stand your ground, be a leader. They're not. These are globalists. They are totalitarians, and they need to be thrown out of office, and many of them need to go straight to jail. So I'll leave it at that. This is not a political show. God bless those Canadian truckers, and GoFundMe. If you don't release that money, you're getting added to our boycott list, company boycott list. You'll join the likes of Nike, General Electric / Procter & Gamble, and so on. All right, let's talk about the week. All right, so we've had I went into the week saying we're going to get a rally, folks. Sunday Night Futures Live. Go back, check it out. I said expect a rally this coming week. And, man, we had a rip-roaring rally. But I said if we rally or when we rally up and into the upper bands of resistance, they are going to roll this market over. Here we are today. So in the short term, you cannot be in growth stocks. Growth is dead. Growth stocks are dead. Why are growth stocks dead? It's because the market is anticipating, they are pricing in more rate, not more, they're pricing in rate hikes. They are believing the Federal Reserve. I can't believe it's like the Pied Piper. They believe that he's actually going to raise rates aggressively. Remember a couple of weeks ago, you had JP Morgan, Goldman Sachs coming out. This is how I knew they were net short and the market was going to break. They were trying to jawbone the market lower by saying, Goldman Sachs come out, they're going to raise about 4 times. Jamie Dimon comes out from JP Morgan, they're going to do about 5 or 6 times. That's when you know they're net short. Don't listen to what they say. Anticipate what they're going to do or doing. And I said it back then, expect a market sell-off, and we've got it. We're in a full-blown correction. So you may be thinking, man, they took down PayPal 20-odd% today. Netflix got knocked down. PayPal knocked down. Maybe they're cheap. They're not cheap. They're not cheap. They're going to go lower. So don't think that you're getting a bargain. Nobody's getting a bargain here. Qualcomm had great numbers last night. They beat on earnings per share. They beat on revenues. They beat on forward-looking guidance. They got hit today, along with the rest of the market. They were not rewarded. So Amazon cannot hold up the entire stock market. So we're going to go over the weekly charts. We'll talk more about it. But I want to talk to you about why longer term we are going to return to growth. Why? I had a conversation this afternoon with a friend of mine, and we're talking about market psychology and why people lose money in the market. It's because they listen to the talking heads on CNBC. These are the well-dressed, slick-back-haired professionals, and you got to listen to them. No, that's the last thing you want to do. So understand that we are no longer a capitalistic-driven society. We are a credit-driven society. Therefore, whatever the Federal Reserve does dictates what the stock market does. So the markets are anticipating more rate hikes, a lot of rate hikes. They're not coming. They are not coming. You may get 1 or 2 token rate hikes. Maybe they'll even do a big half-point jump at the outset in March. But after that, every single Fed meeting should be viewed with not too much hope for a rate hike. We'll go over the reasons why. And as I was talking about earlier, I was spoken to a gentleman this afternoon, and I said, most people lose money because they believe that good news is good for the stock market, when it's actually bad news is good news for the stock market. What the heck does that mean? What does that mean? Well, it means is that if you have bad news, well, the Federal Reserve, it makes it a lot harder for them to raise interest rates because we're quite possibly going into recession right now. So if you have the ADP employment report, which came out on Wednesday, down 300,000, it was the market expected a rise of 200,000. We got actual negative job losses of 300. That's a 500,000 job miss. 500,000 jobs. I've never seen this bad of an ADP report. Tomorrow, we're going to get initial jobless, non-farm payrolls, not initial jobless claims. They came out today, initial jobless claims. Non-farm payrolls come out tomorrow. If this misses, it's going to be good for the stock market. Why? Because the way traders think is that, okay, if jobs are so bad, the Federal Reserve can't raise rates. So very, very important economic data coming out tomorrow. Now, this is dated as of the 27th of January, but this is the Buffett indicator. I usually go over it on Sunday nights, but we're going to revisit it, even though it's not updated for the current market valuation. Folks, I can guarantee you this coming Sunday night, this is going to still say overvalued. The market is very overvalued. How do you know when the market is done going down? When it goes full swing from, it was an extremely overvalued, strongly overvalued, to undervalued. And then the pendulum swings back to the mean. That's when you know the market's done going down. We're nowhere near that. We're going to go over the charts in a moment, and we'll share where I think this market's going to go. Now, I showed you this before, the economic data and how bad it is. And this is what the problem for the markets and for the Federal Reserve. The Federal Reserve is trapped. What are they trapped by? Well, they're trapped by this, the CPI, the Consumer Price Index, the measure of inflation, which were it measured as it was measured back here would be off the chart right now. But they've changed the formula. I won't go into the whys. Trust me. They changed the formula. Google it. Don't use Google. Use DuckDuckGo because Google manipulates the search results. So inflation is on a tear. Here's a one-year view on a tear. So what is the Federal Reserve? Or what did the Federal Reserve do back here in 1978 through 1982 to stop the rise of inflation? Well, they jacked up interest rates. That's the only way to do it. And they were aggressive. And one time, Paul Volcker, the Fed chairman of the time, what he did is he raised interest rates by a half point on a Sunday. It wasn't even a Fed meeting. On a Sunday, he raised interest rates. What is our Federal Reserve doing now, present day? They continue to throw gasoline on the fire. They haven't even thought about, they've spoken about it. They have taken zero action to fight inflation. Have you seen the prices of energy? Have you seen the prices of meat? Any type of protein through the roof. They've done nothing. Here's their balance sheet. This week, this is as of yesterday afternoon, new all-time record highs. If they were serious about fighting inflation, they would have jacked up interest rates 2 meetings ago and they would have stopped all this bond buying. But they know what would happen if they did that. They would collapse the economy. So we're in a precipice, and this is why I'm going to cut to the chase of why the Fed is trapped. They are in an ungodly position of raising rates into a potential raising rates into a recession. But at the same time, you have inflation ripping through the roof. And the only way that they could fight inflation is by I'm talking about killing the economy. So with that in mind, I want to bring out a word. It's called stagflation. We are in what you call a stagflationary environment. What does that mean? Stagnant growth, meaning some growth, a little bit of growth. I think the Atlanta Federal Reserve brought our GDP expectations for Q1 down to like 0.01%. Basically, a rounding error to recession. Actually, you need 2 quarters in a row to have a recession, but barely any growth whatsoever. So with that, let's talk about where to be in this market and where not to be. We're going to use the ARK funds as a metaphor for growth. The ARK funds on the year thus far, it's down 27%. So you got ARK equals growth, ARK down 27%. However, you have value, forget about Lyons Bernstein, international value that is down only 0.14%. Why would that be? No exposure to the US dollar. You're outside the US banking system. And that's where you have your most values at, dividend paying stocks. And that's where you park your money to avoid the inflationary pressures of the United States. You get out of the United States. Where else do you want to go? You want to go country specific? Look at India. India on the year is down a half percentage point, but this fund here is yielding nearly 11.5%. Think about that. On the week, it is up over 4.5%, despite the damage done to all these funds and growth stocks. So growth is dead. Why is it dead? Many of these companies rely purely on cheap money to survive. Many of these companies borrow from banks to buy back their own stock because the money's free. They manipulate their earnings by doing that. Their managers make big bonuses by doing it. The problem is that gravy train appears to be leaving the station. That doesn't seem to be the trade to be in. So what you're seeing right now is sector rotation out of growth and into value, whether it be domestic, better European, international, and what else? Where else do you want to be? Folks, the S&P 500 on the month is down over 0.75 of a percentage point. The Tues are down 2.62%. The small caps are down 1.84%. Everybody is knocking gold. The only problem is gold is up. It's performing better than growth stocks, better than the S&P 500, and it's breaking out. It broke out here in December. Consolidation month last month, this month up. Do we get a continuation breakout? I think that we do. Either this month or next. Gold is going up higher. So what were we doing today? Well, I've been professing as we went into the new year because I was concerned about a major market sell-off. I've been pounding the table to members, stay in cash, keep cash on the sidelines, trade around this market, do some option writing. Don't go heavily buying growth stocks unless they're oversold. And we're going to have some trading opportunities coming up soon, but there aren't going to be a ton of them until we get a complete washout of this market. This is a trader's market. So I'm going to go over at the end of this commentary where I think PayPal and Facebook are going to bottom out short term, not longer term, short term. All right, so we went over where you should be putting your money. Now, last night on Market Wrap with members, I was talking about bond yields, and I warned, get ready for a potential breakout on the 10-year yield. I drew these lines last night. So while we're down for the past several sessions, this is shaping up as a continuation breakout pattern on the 10-year yield. What does poorly in a rising interest rate environment? Growth stocks. You don't want to be in growth stocks. Yields go up, they go down. It's just an inverse relationship. That's the way it works. I didn't make it up. That's the way it was when I got here. The tips. For whatever reason, the tip market is breaking down. The tips are Treasury inflation protected securities. I'm not sure why. I think that traders actually believe that the Federal Reserve is going to be aggressive in fighting inflation. I think that they're going to punt. Why are they going to punt? We're going into the midterm elections, and the Senate has not yet confirmed Powell. Powell wants to keep his job. So what does Powell do to keep his job? Well, he looks at oil. And he says, with the events that are going on over in the Ukraine, it's driving up oil prices. If I raise rates now, it wouldn't be wise. It's not a prudent time to be doing that until this Ukrainian crisis is resolved. Look at oil. It is just in fuego. What is it up on the month? Up over 1.5% and going higher. The right thing for him to do would be to raise rates, but he's not going to do it. Maybe 1 or 2 interest rate hikes. That's it. No more. The markets won't be able to take it because the US dollar, folks, this is one of the most bearish weeks that I've seen in a long, long time. This is one of the primary reasons why you need to think about investing overseas. Get out of dollar-denominated assets. Get into foreign equities. Get into commodities. I don't care if it's gold. You want to get stacks, whatever they call it, stacks of gold, stacks of silver. Great, stack them up because they're going higher. Because when you have the dollar dropping like a rock along with bond prices, that is, as a good conservative that I know says, that is pure AIDS. It's pure AIDS for the economy. That means that nobody wants to touch your economy. We don't want to touch your bonds. We don't want to touch your currency. That is pure economic AIDS. A TZ Canadian. Hey, Bob, those Canucks, they are heroes, man. No doubt about it. No doubt about it. Casper, how long can we go? No, what are you referring to, Casper? Let me know and I'll answer your question. Franklin, how you doing, brother? All right. Okay. So the dollar is breaking down in a very, very big way. And this is one of the primary reasons, folks, when the mining stocks were down today, the gold mining stocks were down today, we're buying. We bought call options. And if anybody that out there has been following me for any length of time, I usually sell options. I don't usually buy options. If I ever buy options, I better be able to give a one-line sentence of as to why I bought those options, describing my competitive advantage over other traders, because it's a coin toss, right? I bought what you call a call debit spread. Basically, I bought an in-the-money call, and I sold a deep out-of-the-money call to help finance the purchase, not 100%, by about maybe 25%. I got a discount. So rarely do I make a bet like that, and it is a bet, unless, of course, I have that advantage. What was I looking at? I was looking at a couple of things. And all you need is this. All you need is this. You don't need to be sitting in front of your computer all day long. All you need is this. I saw the US dollar down dramatically, dropping like a rock. And I saw gold get hammered. This is not going to give me an intraday chart. Let's bring up the GLD. So I look at my phone and say, wow, it's down pretty serious today. Look at this drop. Then I look back not too long later at lunchtime, and it's just shy of break even. So what is that? What does this tell you? What this tells you is that this was panic. And what also this tells you is that people down here knew it was panic, and they stepped into the breach, they bought, and they got paid off. And the most important metric on this chart here is not the 15-minute chart. We're not day traders here. The most important metric on this chart is this. 1800. They closed it back above. 1800 spot gold has been a ceiling of late. Now, psst, it's a floor. It's a floor. This chart here is getting ready for liftoff. If you want to take a look at a different view, this is a coiled spring. This is going to get resolved as we enter the apex of this wedge formation, triangle formation. Call it cupcakes, it doesn't matter. This is going to get resolved. I believe it's going to be the upside. And folks, it's not going to be, once we break out above 1850 and we close there, it's not going to be a slow grind higher. It's going to be a massive short covering rally. We're going to be at all-time highs probably by the summer if we break out this month. And quite possibly a lot sooner than that. So why else did I go adding to our gold trade using the gold miners, the specific trade, NUGT? This is a leveraged ETF, not for the faint of heart. Why did I go with NUGT? Simple. Relative strength, right? As I showed you earlier, value, international value has more relative strength versus growth. India has more relative strength versus growth, and right now, international value. Gold has more relative strength versus growth, for that matter, versus the S&P 500. I don't know about the Dow, probably the Dow too. I don't know what I do with my S&P 500. I lost it. So why nugget and why now? Relative strength. We're up on the week. Now, I went all the way out to June on those options. Why did I go out so long? Normally, I would go out 60 days because I'm going to be in and out. Why did I go out so long? The reason is that you need to allow yourself some time to be wrong. The problem that many traders make when they buy options is that they don't give themselves time to be wrong. And that time decay or theta decay burns away the value of those options. Right now, I have virtually no time decay on these options. But that time decay, 45 days from expiration, begins to pick up rapidly. And we want to be out well before June. So right now, I opened up. I'm going to look to add more. But right now, I opened up a position. And once we begin to break out and close above $50 per share, that's what we're looking for here. We're looking for a breakout on NUGT above $50 per share, a breakout on gold, especially if we get a breakout on gold above $18.50 the ounce, it's game on. If you're new to the markets, meaning new in the past 18 months, 24 months, especially since the beginning of COVID, folks, you haven't lived through a bear market. And it's brutal. Just when you think a market can't go lower, it goes lower, a lot lower. Just take a look at Netflix. Netflix report earnings. This is an S&P 500 stock, folks. It closed out the day on January the 26th with RSI. This is inaccurate. I was watching it at around 9. So it's a little bit less worse than this. That's unheard of for an S&P 500 stock to be down in the single digits. This sell-off is unprecedented. Unprecedented. I've been trading earnings for a long time now, and I have never seen an S&P 500 stock get hammered like this. I've seen small company growth stocks get hammered like this. DocuSign, this is from last quarter. No great shock. That happens. Stocks blow up in that mid-cap, small-cap size. They blow up all the time. Not S&P 500 stocks. So you fast forward to PayPal. PayPal, what are we down in the week? %24 on the week. This is unprecedented price action. This is .com 2000 price action. And this doesn't end well. It doesn't end quickly until the Federal Reserve gives the green light that they're done raising rates, or the markets anticipate that the Federal Reserve is done raising rates. This is going to continue. Simple as that. So what are the charts telling us about next week? Well, if you take a look at the Dow transports, these are not your growth stocks. These are stodgy old stocks. Like UPS came out with good earnings the other day. It was up. What did it close out today, out of curiosity? Did it hold 230? 328. Look at this. This is a beautiful chart. Beautiful chart. This is not a growth stock. This is more of a value stock. It's doing wonderfully. It's not one of these ARC stocks. Not that this is a bad fund. It's not time for this fund. The sentiment of the market and the economic environment that we're in right now and the Fed rate cycle is not growth territory. It will be again, not right now. So as for the transports, they're doing well. They're breaking out, frankly, on the week. Let's move on to the VIX, the volatility index, weekly chart. Is this right? It's down on the week? It doesn't make sense. I guess because the earlier, the earlier week sell-off, that's why. So the VIX, believe it or not, is down on the week despite today's price action. If we close above 26, 25, 50, 26 on the VIX, expect more of a sell-off next week. The Dow Jones remains up on the week. It's not growth. Therefore, stodgy dividend-paying names are doing better than growth stocks. Small caps. Here we go. The small caps are actually up on the week, but they're not going to hold. I'll tell you why. The reason why they're up is because they got hammered so hard, and this is a relief rally. The reason why they're not going to hold, because we have one trading day left to go. If they fail to close tomorrow, this is the IWM, the small cap ETF. If it fails to close tomorrow above, let's call it 206.50 tomorrow, it's probably going to break to lower lows at some point in time next week. So what was support here is now resistance. It's the way it works. We're putting in lower highs and lower lows, exactly what you don't want a growth stock to do. So when you see this, you sell. Either you short or you go to cash or you go into an international fund. The Trip Qs. Pretty much a reversal bar. We're still up on the week, surprisingly, after all the damage that was done today. But we need to do this. If we close out the week where we're at or worse tomorrow, or even slightly better, we need to take our crayon out here and say, okay, guess what just became my new upper band of resistance? The highs of this week, and they're declining. So you should expect any rally up and into this resistance level to fail. The banks. The banks are up, and we're long on the banks. The banks are up nearly 2% on the week. Why? Why are the banks up 2% on the week? Stock market got hammered today. What's going on? It's simple. Banks love rising yields because they make more on their loans. They charge a higher yield on their loans. Their margins get wider. It's called NIM, net interest margin. So the banks, those fat cats, they're loving market sentiment right now because remember, it was Goldman and JP Morgan and whoever else came out pounding the table that there's going to be more interest rate hikes, more and more. There's going to be half dozen interest rate hikes in 2022. Why would they say that if they were net long in the market? Do you have a wealth management account with Goldman Sachs or JP Morgan? If you do, you got to be banking a couple of million a year. You got to be worth $50 million a year, $50 million net worth to have that type of access. They are net short of the market. Their earnings this coming quarter are probably going to be gangbusters out of their trading division. Not that Goldman Sachs had a good quarter last quarter. They had a horrible quarter out of trading. They're not always right. So banks doing very well. Technology, not so well. Up only a half percentage point, and we've given up a lot of territory, a lot of real estate this week. We rallied up and into resistance. What was support for several weeks is now resistance. These charts are telling you a story. You could either listen to them or you could ignore them. But ignore them at your own peril. Because the last thing I'm buying right now is a technology stock, especially a large cap technology stock. Probably next week, I will be buying PayPal and Facebook as a trade, not an investment. The semis, they're actually doing pretty well this week. Qualcomm had good earnings. They're up over 3.5%. But you got to be careful here. This is what I always warn about, is that you get these fake bull markets, and they lure traders into thinking that the rally is over. You just saw that with Bitcoin. So this is probably what's setting up here. What are you doing to me here? Come on, stay. All right, you weird me out here. Come on, dude. Is a bear flag setup. If we resolve this rally up higher to the downside, we're probably going to test 240 on the trip Qs or semis, and we're going to head down to around 214, 215 per share. What else? I think that's good. I think we covered it. So in short, tomorrow morning, I'm going to assume that they're going to open up the markets higher. We're holding gains after Amazon's earnings on the NASDAQ 100. We're going to get a continuation breakout here. We're going already. Before I finish drawing my line, it's going. We're going up higher. And we may close strong tomorrow because it's a short covering Friday. Monday, different story. Gold, as I just talked about, is up. And beginning, folks, it's beginning to break out. Look at the higher lows. This washed out a lot of weak longs. Rallying back. Get ready for a breakout here. All right. Let's do some chart requests. Casper, AEX. Casper and I were reviewing, was it Saturday or Sunday we did that? Reviewing the Amsterdam Stock Exchange, of which he was short. Are you still short? And I said a couple of weeks ago, I thought it was going to break. And it's breaking. Where's my weekly chart? There it is. Oh, it did break, but it rallied back a little bit. This is still going. It's going. Yeah. European markets are going to react overnight somewhat to our markets from today. What may offset it is the rally in the futures market. But I'll tell you, if that Amazon number didn't come out this afternoon, Tomorrow morning, you'd be waking up to the AEX down at least a percentage point. You had ASMLs too as well, right? Why don't I have this chart here? Ah, here it is. Weekly chart. Oh, it's a semi name. It's frankly underperforming the semis. Resistance at 688. This is probably going to break lower. Great. Sally, hello. Female. I have 90% male demographic. We welcome the female demographic. Welcome aboard. Great channel. Thank you for all your knowledge. Thank you very much for the kind words. I appreciate that. Oh, you're still short. Good for you. Stay short. All right, let's take a look. Oh, I meant to go over my bottoms for short-term bottoms for PayPal. You're very welcome. Okay, PayPal daily chart. RSI is at 24.22. In a normal market, that would be, wow, really oversold. You got to buy PayPal. Not now. It's going lower. It's leaning into its third standard deviation Bollinger Band in red, not supposed to be there. It's going lower. Volume, still very, very heavy. This is institutional distribution. This is not mom and pop selling 100 shares of PayPal. Now, price targets. Price target number one is going to be, I think we overshoot here. Watch for a 118 handle on PayPal. If the market really begins to roll over and capitulates, you could see PayPal. You could see PayPal at 104, 105 per share. I would be a heavy buyer within this range of PayPal. But just keep in mind one thing is that what I could see setting up here, and this is getting way ahead of myself, but I'm negative projecting on PayPal. If we consolidate for a few months and we form a consolidation range like this, that would be a head and shoulders setup where we get a massive break. I don't know if that's going to happen. That may be a stretch on my part, but I'll put it out there. So PayPal is going lower. Maybe not tomorrow, may rally tomorrow, maybe a ruthless rally tomorrow. It's going lower. We haven't hit support yet. Facebook or Meta. Okay, Facebook down over 26% on the day, trading down below the third standard deviation Bollinger Band. It's not supposed to be there. Can it pop? Sure. That rally should be sold. Volume. Institutional distribution. These guys aren't done yet. They are loaded up with Facebook stock. Lots of institutions got their head handed to them today. They got to get out. They don't want to send out their quarterly statement showing Meta. They don't want to show it. Not with a basis cost of a 300 handle. So where do you buy? This one's a little bit tougher, but I think we could easily see 207 on Facebook. Maybe it'll get granted a reprieve at 225. The short covering rallies are going to be ruthless. They're going to be rip your face off rallies. If you're thinking about shorting these stocks now, you're crazy. You're crazy. Despite my passion that they're going to go lower, it's very easy for them to rally 10%. No doubt about it, just like Netflix did. but they're going to roll over, just like Netflix is doing. Let's go to Snap. You know, I forgot about Snap earnings. That's a good question. I didn't even check on it. Oh, they're ripping, huh? That's a strong move. You know, you stop Snapchat stock soars 60%. This is why you can't trade earnings on these small company stocks. They will destroy you. So it looks like it's had good numbers. Earnings per share beat, sales beat. I don't know what their guidance is, though. It's got to be pretty good because they would have killed it on guidance. So let's take a look at the. We're using TrendSpider. I'm going to be doing a. I don't know what I'm doing a presentation for them. I think it's on Twitter next Tuesday night. 35% discount code below. I've been interviewed by them a number of times. I've done presentations. I haven't done one since COVID just hit the news and the markets are still rallying, ignoring it. And I said, the markets are going down. Supply chain disruption. What do you hear about now? Supply chain disruption. So Snap. Let's talk about Snap. It's had a lot of technical damage done to it already. If this is a dead cat bounce, and I'm not saying that it is, the gap is at 31.71, where it's well beyond that gap. All right, so this is the value of having the automated trend lines. All right, click of a button. We're up here. Up and into this resistance, I'd be a seller of Snap on this market rally. I think you're being given a gift right now, a big move, and I would be out of Snap. It's a growth stock, a quintessential growth stock. If the market perceives that yields are going up higher, they're going to take Snap down with the rest of the market. Snapchat's not going to outperform a stock market that's declining heavily. It'll go down along with it. It's a growth stock. It's going to get killed. This is a gift. I would be out. Hey, Donnie, welcome aboard. I got a couple of emails from you. I got to get back to you. I'm sorry I'm delayed with those, delinquent with those. You should send me a DM in Slack. I'm easily available. I should have said any false flags, my bad, and why Jets. What would you say? What do you think would happen if there are any false flags or actions in Ukraine? Well, think about it from the perspective of energy. Russia has the largest reserve in the world, bigger than Saudi Arabia, for oil. So oil prices are going to skyrocket. Natural gas prices are going to skyrocket. We go into recession automatically. Inflation rips through the ceiling. And either way, rising interest rates by the Fed or inflation, stock market doomed. So it would be very, very bad. Very, very bad. And we're not talking, Here's what these morons in Washington don't understand. They don't get it. This is not Syria. This is not Afghanistan, which we were humiliated in Afghanistan. This is a near peer rival. If we couldn't leave Afghanistan with dignity, what are we doing messing around with a country that could probably beat NATO in a conventional warfare, has tactical nukes? So if we choose to go that route, they'll use their tactical nukes. What are we doing here? It's insanity. There is I don't even want to get into it. We are in a collision course. I can't believe we have 3 more years of this administration. And where Congress is with demanding the president go to Congress for an act of war prior to any military action, I don't care, Republican, Democrat, a bunch of goddamn criminals. They have foregone their jobs. So the War Powers Act should be revoked. That's the president's ability to commit troops for, I think, 3 months during times of crisis without the authorization of Congress. It's been exploited, and it's got to be done away with. It results in non-ending wars because any conflict with Russia is not going to end well. Love. Airlines broke down a couple of weeks ago. I had to check and see if Love is on a boycott list. They did something a few weeks ago. Bad. I forgot what it was. I think it was with their pilots. Not bad. Not bad. Weekly chart. What we're doing is we're putting in higher lows. So would I buy it here? No. I would wait for the breakout. I would create an alert. I would wait for the breakout above resistance. And I don't want any sensitivity. I only want to know if it closes above that resistance level. But it's not looking bad. It appears as though our volume to the upside is declining. That's a bit of a concern. So just keep an eye out for a break to the downside. If it breaks down below the support level here at around 41 bucks a share, you got to avoid it. Daily chart. Not a good day today, but not a horrible day like the rest of the market. This is not a growth stock. Casper with Tesla. Tesla closed up today. All right, so my comment, I think it was back here. No, it was back here in the week of January the 17th. I said that if Tesla fades back down below $1,000 a share, it's not coming back for a long, long time. And sure enough, the following week we rallied and we faded below that mark. I think that Tesla is a short because what we're doing here is we broke support last week. Now we're rallying back in an effort to recapture. I think the recapture probably fails. Daily chart. We did recapture one support level today. I would be tracking it as a short. I would not be a buyer of Tesla. Quintessential growth. Affirm. That's the payment company, right? Yeah, definitely a growth stock. Uh, Southwest Air is at its low. That's actually a negative for a stock. Weak. This is the old saying that I like to use: is weak stocks tend to get weaker, strong stocks tend to get stronger. So if a stock is at a 52-week or a whole all-time low, the probability is that it's going to continue lower until it stops. And maybe Southwest has stopped for all I know, but I'm not seeing that right now. Franklin. Hey, if you like the program, click the thumbs up. Yes, please. Thumbs up, subscribe, all that good stuff. Thank you. All right, to Affirm. Affirm, I believe, is a payment processing company. Weekly chart. It's struggling with a support level. A lot of damage has been done here. We are in a trading range last seen back in July, summer of 2021, from which we broke out of. This is going to require a lot of consolidation, just as what you saw back here. So the question then becomes this: if you get multi-week consolidations, well, does this become a head and shoulders setup? Left shoulder, head, right shoulder? Or is it a bullish consolidation? We don't know until it either breaks out or breaks down. Technical analysis is not about reading the crystal ball. It's about understanding probabilities, understanding the economics, and understanding the psychology of the market and how you're getting effed with by the people in the media, including those slick back salesmen that come on as dressed up as hedge fund managers on CNBC. Why are they telling you to buy a stock into earnings? It's one of the most, I don't know, I want to find the word for it, insidious pieces of advice to give somebody. Not PayPal. Telling people to buy a stock, especially growth stock over valued stock, into earnings is unconscionable. I would never, ever do it, ever. So if somebody's giving you that kind of advice, they have no understanding of risk, or if they do have an understanding of risk, they don't give a goddamn about you. Simple as that. Google, I want to short. I'm looking for a reason to short it. I'll go to your symbol, Google. I usually do GOGL. I'm looking for a reason to short Google. I want it to go down. But right now, I would not short it. Show me a close above 2,700 per share, and it becomes a short. Not right now. But if it breaks out above, what do we close today? We close above 3,000. It's buy. Do you have favorite growth stocks to short? I'll watch a replay if you covered them already. I'm not looking to short growth stocks right now because so much damage has been done. I'm looking for a counter trend rally. One stock I'm looking to short, Netflix. It's had a counter trend rally. Tesla, I'm looking to short. Possibly Facebook on a counter trend rally. But I would not chase the stocks down now. Too much damage has been done. There's going to be a rip your face off rally in the next few days. Could be as soon as tomorrow. So expect it. But I think those rallies are going to fail until we hit historical support levels. Is Google a hold? Yeah. Yeah, right now it's a hold. I wouldn't buy it. I wouldn't buy more. I wouldn't short it. I wouldn't sell it. Let's do a deeper dive. Weekly chart. Yeah, it's holding support here. it would be irresponsible for me to say short this, and also to buy it. But it's more of a bullish chart than a bearish chart, no doubt about it. I saw a statistic yesterday that YouTube, which is owned by Google, YouTube's revenues, this is one division of Google, YouTube's revenues eclipse, their ad revenues eclipse the revenues of all of Netflix. This company is a juggernaut. All right, folks. With that, everybody have a great night. Thanks for being here. I really appreciate it. Smash the like button. Tell a friend. Subscribe to the channel. And don't forget, if you're not on our email list, get on the email list, and you'll get alerted when we go live Tuesday night. I think it's live, or I'll get more information about the TrendSpider presentation I'm doing. They just contacted me. I have some information. It's going to be about my strategy with crypto. So if you want to want me about what I have to say about cryptocurrencies, Bitcoin in particular, check out Tuesday night's show. You're welcome, Casper. Jeff, be well. You're welcome. Everybody have a great night. Be well.